All right, guys, I just wanted to do a quick video here on BAT, Basic Attention Token, where we're at, where we're going, and how to trade this. All right, so I am often giving um, instructions on how I trade the levels, and sometimes I don't do the best job at describing how I do this. But there's mainly two big rules that you have to adhere to when you trade levels. First, once you've got your levels drawn out, like I do on this chart, you want to make sure that from the point in which you enter the trade, let's say you entered here on basic attention token at 136, and to your final target, you have at least, let's say our final target is up here. In fact, let me just go ahead and draw a rectangle because I do think that's where we're headed, somewhere up in this area. So let me just say here, target. All right, so you want to make sure between where you enter and where your target is, you have at least 3 or 4 levels. I like to have 3 or 4 levels, all right? I typically don't like to have less than that. And the reason why I like to have that many stated levels in between me and my goal is because should we have a big move in one day, um, chances are more likely that you're going to hit one of those levels of resistance and know that that is your exit point. All right, so that's where you're going to take some of your profits, if not all. All right, so that's the first rule. Have 3 to 4 levels between you and your goal. All right, so in this case, we enter this trade at BAT is at exactly $1.37. We enter here. Let's say our final target is $1.80. All right, and we have 1, 2, 3, 4 levels. All right, and so I've taught this before. As you're going up and you hit one of those levels, that's where you take, 25, 30, whatever you predetermine profit, and then on your way back down, you grab it again. You reposition or you re-enter. All right. So if you don't have the patience to wait for it to come back down and re-enter, then you would look to reposition into another altcoin, which I do oftentimes. And sometimes I feel like I leave my Substack subscribers confused as to my strategy. Some people have said I'm over trading. That's not necessarily the case. I just don't like to be out of a bull move. So I look right away. There's plenty of fish in the sea, plenty of opportunity out there. Look right away to reposition into another crypto that has a great setup. I'm always looking for good setups. And once I reposition, then I do the same thing there. But if you have the discipline to stay and wait for it to come back down, you would re-enter and then you take some more off the top. Re-enter until you hit your target and you take 100% off the top at this point. Now, this brings us to rule number 2. All right, this is the way you trade the levels. But what happens if BAT takes off like a rocket ship and goes straight up 30, 40% in one day? And then along with that, we intersect with one of our resistance levels. That, my friends, is what I feel I haven't been doing a good job explaining to my traders, my Substack subscribers. All right, so if we're hitting 25, 30% in one single day, and that candle also happens to intersect with major resistance, I'm 100% out. I just take my profits and I look to reposition somewhere else with another good setup. Why do I do that? Because how many days are you going to have of that type of profit in a row? Now, chances are the next day you will not have another 25, 30% day. That is what the probability is. And I like to play the probabilities. Yes, I could miss out on further move upwards. I won't get my target, etc., etc. But when the market increases that much in the altcoin space here, I'm especially talking 25. I mean, I'm talking the lower cap to mid cap uh, cryptos, which can move 25 to 30%. When the market moves that rapidly in one day, I do not hesitate to exit 100%, get out, and look for other opportunities because there are massive amount of setups out there, and all you have to do is scour the charts, and you'll find yourself a good altcoin setup. So sometimes I feel like I set these targets and then, I send them out to my Substack subscribers and to you guys here in TradingView and YouTube, wherever you are. And then all of a sudden we move up 25% and I'm gone. And I'm not talking about the trade anymore. And you guys are like, well, where's Stu? Where did Stu go? He left us high and dry. Well, I never leave my paid subscribers high and dry. They always know when I enter and exit. But the rest of you, that I've set a final target, and then I don't end up talking or discussing the crypto anymore. It's because that has happened. We have moved up 25-30% in one day, and we have hit a significant level of resistance, whatever that is. And I've decided I am not going to press my luck. I'm going to take those, I'm going to capture those profits, and I'm going to look elsewhere. And so that's what I do. So this is the way to play basic attention token as well. Now, I'm not in this trade at the moment. I set this video up because BAT is actually a perfect entry area right here at $1.34. I have previous videos and posts about how significant this level is. And so I think this area is a great place to enter. Now, is there a risk that we could come down and touch the support way down here at, what is that, $1.25? Yes, there is that risk. And yes, we could do that. It depends on what your risk tolerance is. I would catch some of it here. And then what I would do is look to dollar cost average in. And, as it goes down to that level of support, you enter more and more of your cash designated for this specific trade into the trade. All right. And then, you capture the full 100% amount right here, set your stops down here, and you're good. And that's the way you play this trade. But here at $1.34, I'm doubting we come below this. Now we are on the daily right now, and it is potential that we bust below that because we have not confirmed that level as support on the daily yet. We need to close above that again to really indicate, but I think $1.34 is very significant. In fact, what I should do here is take my crosshairs and move that level, thicken that level, just so we know the significance of it. And you guys can capture a screenshot here and save this for your trades if you want. But I'm looking at, in this particular trade, exiting upon our previous high or somewhere thereabouts. Now, I realize I've said in the past that we can go to $1.50. I do still believe that. I very much believe that. And if the price ascension is does not increase rapidly, then I may continue to hold if I was in this trade past this target level. This area right here, this purple area right here, is what I call FOMO area. All right. And why do I call it FOMO? Because once we get above our previous high, and let's say this is a rapid acceleration day, and we're pressing up on 20% and we recapture our previous high, and all of a sudden it continues to go up. This is where the newbies start to panic buy. They see that this thing has gone up 20-25%. They're missing out on the action. This is where they buy. They buy right here. All right. And so this is where I start to sell all along the way. If we recapture our high, I'm selling this all the way up to our 250 level if we get that high. But a more conservative play is to capture most of your profits, if not 100%, at our target around $1.83 to $1.88. And again, if we continue this slow ascension, I might reevaluate that in the future and bring a different perspective. But for now, that's what I'm looking at. So, just to reiterate, my two rules for trading levels after you have your trend lines and your levels all drawn out, and you know how the chart looks, and you know where the price action is, etc., is number one, from your entry point, have at least 3 or 4 levels above you. And you don't want one of those levels too close to where you enter. You want to make sure that it's at least 5 to 10% above your entry price. Let's say you enter here. All right. So this is a good example. This first level above us is 8.33%. All right, perfect. That's it. You want 5 to 10% above your entry area. And you want 3 or 4 of those split out fairly evenly. And then you're going to trade that in waves as you go up. All right, so that's rule number one. Always make sure that you have 3 to 4 levels and at least 10% from your entry. Rule number two is if we go up 20 to 30% in one day and we intersect with resistance, then you're at least mostly out, if not 100%. Lately, I've been 100% out just because I've been scouring the charts so much and see so many opportunities out there that it makes sense to capture my profits and move on. And that's what I've been doing. It's been working out well for me. All right, guys. So hopefully that helps a little bit and you can see and understand how I trade and make the most out of each trade that I'm in. Take care, all.